Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com, founded it back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and of course, advanced mechanical trading algorithms like our 21 spine ES mean reversion systems with about 90% winning trades. They've been active here for years. We just closed out some recent trades. In fact, closed out last week. You can see all these nice winning trades. And of course, our famous KISS trend following systems. Okay. Awesome resource. By the way, just a side note, one of our subscribers went long GE. He wrote in back in October. You can see the system went long on GE back here with an initial smart trailing stop at 84.20. It's since raised its stop all the way up to 147. You can see it's raised its stop 22 times. The system went long on October 24th. And that trade is up almost 80%. So congrats to that subscriber. I'm not in this. I wish it was. But this is a great example of what you're missing out by not being a subscriber, where you can get access to all these KISS systems. So again, if you're just watching on YouTube, please consider subscribing. It really helps us out, and hopefully it'll help out your personal trading account. Okay, so back to this newsletter video. It is Monday, April 29th. This is our backend recorder for our website, which I'm going to go ahead and get started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, April 29th newsletter. Hope everyone had a nice weekend. Steve did a weekend newsletter, so there wasn't a YouTube video. So this video here on Monday will be a little longer than a normal intra-week video, just because for my YouTube friends, I want to update you on quite a few things. You can see that this update is divided into 5 major sections. All right. And a couple things, guys. Earnings, big items this week. AMD, Amazon tomorrow, and actually Apple is on Thursday. So quite a few things there. Key events for the week. There's a lot of economic news here, potentially moving the markets. Remember, in earnings season, had quite a few big tech names report last week. Again, we have AMD and Amazon tomorrow, Apple on Thursday. So this week, consumer confidence data on Tuesday. Wednesday, quite a bit of stuff. ISM manufacturing, FOMC rate decision, and the QRA data. That's very important. That's, Fed and liquidity. And let's be honest, that's really what drives the markets, is liquidity. And we have ISM on Friday, and of course, job payroll report. All right, let's go ahead and move on. Next, item number 2. So this is GE from the KISS systems, directly from the KISS tables. So again, I already discussed this in the opening part of the video, but for our standard newsletter, this is right on our website. I'm just showing it as an example. One of our subscribers, Morton7, he goes by in the trading community, asked about this today. He's been following it. I think he entered this trade back in the fall. The system went long on October 24th at 91.18 back here, set initial stop at the lows there. And you can see this, it raised its stop methodically over time, 22 times in fact. It's the number of stops in the trend. Current stop is 147. The trade is up almost 80%. So much congrats to Morton following this system. Again, that's a reason to become a subscriber to Breakpoint, so you can get access to these amazing systems. All right? So just a great example. Now, some people ask what the A means. That's potentially amateur buying. Sometimes in an uptrend, they mark a little short-term high. You can see the last time it did. So we'll see, things are getting a bit stretched here. Again, one hell of a trade by the system, though. Next. All right, back to the general market. So item number 3 shows the index sector table, what transpired today. So you can see major indexes all of about 0.3% for the Dow, S&P, and Nasdaq, with the Russell leading the way up 0.8%. As far as the 21 market sectors here, most were up. Just looks like 4 were down, just down slightly. Looks like today the biggest mover was consumer discretionary. The weakest was communication services. Currency-wise, US dollar down 0.3% today. Cryptocurrencies, Bitcoin's been a little weak here. Some of the stocks are weakening, such as Coinbase. Looks like a short setting up. We'll be discussing that. As far as commodities, The general index was slightly down. Crude oil was up 0.3%. Natural gas down 3.17%. Actually, guys, some of these commodities here don't make sense. Looks like this table may not have updated correctly. Natural gas, for example, UNG was up pretty nicely today. So we're going to kind of skip some of this. Precious metals, what we saw here was the GDX, the miners, was up, but both gold and silver were down about 0.25%. And today we saw the 10-year, 30-year slightly down. Next, item number 4 shows the economic news calendar, which I already went over. Like I said, an absolute ton of economic news this week. Jobs, non-farm payroll report on Friday, QRA on Wednesday, FOMC, ISMs, PMIs, all kinds of stuff, and of course, all these slew of earnings. And let's go and get to these charts. So first chart below, item number 5, talking about some of these earnings. So Amazon reports tomorrow, April 30th, after the close. You can see Amazon was in an uptrend channel. You get some macro divergence. It pulled back. It basically came into this demand zone last week, bounced off of it. Now I could extend this trend line here. If I do that, so that broken trend line is now potentially resistance. But again, anything goes on earnings, guys. We can stall right here. We can pop up to a new high. Who knows? I did hear a rumor that Amazon may be announcing a dividend. If that's the case, well, likely it's going to go quite a bit higher. But again, don't hold me to that. I suggest you do your own research. Again, this is tomorrow after the close. Image number 6, here's AMD. This is also reports earnings tomorrow after the close. Now, AMD is interesting to me because unlike some of the others, it has had a really good correction. It was up in the 227 range up here in March, fell all the way to 146. So heck of a haircut, into this support zone where it's bounced off of. You have the declining 20-day moving average there. So again, it's not as overbought as the others were because it's come down quite a bit. It would have been nice if it had come down to test this 200-day moving average, but regardless, we'll see how it responds to earnings tomorrow. Chart 7, here's Apple. Apple gapped up today, closed off the highs. You can see it traded outside this downtrend channel for a bit, came back down. You had a nice divergent low. Look at that MACD on that last low. They had they had a analyst upgrade it this morning. That's why it gapped. But again, this reports earnings Thursday, May 2nd, after the close. So be aware. Last week, some of the big cap tech stocks, of course, got nailed. Here's Meta. As you know, Meta had that big gap down in earnings last week, and you can see it's still struggling here. There's a gap on the cash here down around 400. I wouldn't be surprised if it fills that over time. Maybe even test the 200-day moving average. It's been a while since we've been there. Chart 9, here's Microsoft, also had earnings last week, which did well, but it only went up a little bit, and it's even pulled back today. Another one that I don't have on here is Google. Google was down today as well. Remember that reported earnings last week. Again, we'll see how earnings tomorrow look on AMD and AMD and Amazon after hours. Now, moving on to the index charts. Chart 10, here's the daily snapshot showing the 5 key major indexes just with simple Bollinger Bands. Remember, we were quite oversold over a week ago, riding those lower Bollinger Bands. In fact, below the lower Bollinger Bands for 3 consecutive candles on the Nasdaq, etc. So we were quite stretched. A lot of the mean reversion systems were long back here, as you recall. So we got our mean reversion bound. So far, we have 3 waves up, running right into the middle Bollinger Band. That's the 20-day moving average. Next, moving on to the S&P 500. That's one of our proxies. Here's the S&P 500 daily. So here, so far, we've had a nice correction in April, right? We filled that open gap, which was a target. There was also a little demand zone down there around 49.50. So we bounced. Again, could we go back to highs here? Again, definitely. But so far, we only have 3 waves up. See this ABC. So my concern is that we're going to ultimately form a lower high because remember, we did have a confirmed symmetry break back here. Whenever you have a symmetry break after an extended uptrend, more likely odds favor a lower high. Okay, so that's one thing I'm cognizant of. Again, we have the 50-day moving average here, which could offer some resistance, but it also wouldn't be surprised, even if we do form a lower high, that it pushes up a bit more, maybe into this zone, kind of a supply zone up here. Chart number 12, here's a clean daily view of the S&P. This is one I marked up on the weekend. So again, we had a nice channel break in early April. That signaled the start of that downtrend. Sold off, lost the 50-day moving average. But notice the illustration I have here. So this is the count that that I prefer at the moment. But again, the thing about technical analysis, guys, it's not a crystal ball. There's always options, and what we always say, project, which means you can have your scenarios that you favor, you monitor, and then you adjust if necessary. Okay, so nothing is set. So right now, this is just something I favor with an initial A move down, a B wave that's unfolding. It should be a 3-wave unfolding a lower high somewhere. You notice the moving average ribbon. It was bullishly stacked that whole time. It went bearishly stacked here, and it's pinching on the underside. Many times that first pinch is a good sell. Here's an example back here in October. It went bearishly stacked, and then it pinched to the underside, gave you a short. Again, now we'll just have to see how far this wave C goes. Again, there's some resistance. I could see it even making all the way to 52.20 perhaps. Otherwise, I would love this scenario to play out. You get a C wave down, probably get into this area. This is a big demand zone. In my opinion, that would be one heck of a buying opportunity. Again, we don't always get what we want. And by the way, the KISS systems, which are flat right now on the indexes, would likely buy this low just right off the lows. It'd probably have an excellent entry there. Next, chart number 13, here's another chart just with some fibs. You can see we're right around the 50% fib. Often the wave Bs retrace at least 61.8%. And honestly, what Steve and I have noticed over the years, as the market's gotten more artificial and all these algorithms and the Fed messing with it, and liquidity, blah, 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 that moves tend to be a little more extreme than they used to be in the past. So that's why I said, if we go above the 61.8 here, to me, that still doesn't negate that potential wave B lower high. I could see it going all the way up to this 5200 area and still form a lower high. Next. Chart number 14, here's another daily chart. Here, there's this trend line here. I'm showing you this because, remember, these broken trend lines often like to be tested. So if we get a much higher retracement, maybe we test the backside of the under part of that trend line, could be resistance. All right. Next. Moving on, chart number 15, here's a weekly view of the S&P. Shows you that same thing that I just showed you on the daily. Potential initial move down as an A. We're working on some sort of B. Then eventually we get a nice pullback into this demand zone. Major support down in this range, in the upper 4800s. Wave C, then we go to new highs. That's one option. Yet another option would be something like this ending diagonal, whatever, where we bounce up in the wedge, or we could break out of it, or we pull back in the wedge, bounce up, kind of chop around here, and eventually break it in a big way. Maybe that would start the next bear market, but again, that'll be in the future. There's a couple options. Looking at the KISS systems, here's the daily KISS system for the S&P. Again, as you know, it went to cash about 2 weeks ago at 50.82. Excellent exit there. It locked in a very nice trade. It went long here on October 31st. So made a nice trade. It is flat. But what I'm showing you here, the same moving average ribbon. See how it's pinching on the underside? On here, you have the 50-day moving average in red, which are right underneath. And you have the ATR here, which is resistance. So those are areas where we could move up into here. Now, if price gets much above this ATR, then likely we're going to go to a new high. But for now, I'm watching for potential resistance up around there. Chart number 18 is the 4 time frames, just showing you the daily, which see the half day, 130 minute. On the 130 minute, we have a little bearish rally here, but we have ATR supporting these lower time frames. And chart number 19, here's the weekly KISS systems. Again, Steve showed these on the weekend, but I'm just showing you here again in case you're just a YouTube viewer. These are all, while the daily KISS systems on the indexes got out, the weeklies are still long. You can see on the S&P, STS is 4909, Qs is 40590. the Dow, you can see, and IWM. Again, makes sense, guys. The weekly KISS are going to have wider stops. They do much less trades. They may keep you in trade for 1 or 2 years at times. But again, give and take. They're going to be much less trades, but they're going to give things more room. You'd have to decide which ones fit you. Again, the weekly would be, I think, something would be applicable to folks who say have a, they're retired, they have a 401k, they want to protect it so they don't go through bear markets, but they want to overall try to capture bull markets and uptrends. And the weekly KISS systems do fine for that. And again, very little work. You're talking 1 trade a year maybe. So, you can play golf all day. Next, chart 20. Here's the half-day chart. Just zooming out on the lower time frames. Again, remember, we lost that trend line in early April. Big sell-off. We got near this 200-day moving average. We filled that gap, bounced off the demand zone. You can see the fibs are right around the 50% fib. 61.8 fib is around 41.50. Chart 21, here's a 2-hour chart. Here we have a couple different fibs. And what we like to look for sometimes is the fib confluences where you have fibs overlapping. So here, notice you have 2 fibs overlapping, 61.8 and 50%. So it's kind of an important area. But honestly, there's not a lot of resistance up in here. The first big resistance zone is probably up around in this area. Chart 22, here's a 2-hour view. Steve showed this in the weekend. It's kind of a big range here, honestly, but this is the start of some initial resistance. The dotted lines here show you essentially a 1-to-1 symmetry, which so far we've met. So it could just be a simple ABC. Again, wave C could be longer than wave A, but right now they're about equal. Chart 23, here's a 60-minute chart with some wave counts. Again, we don't want to get too bogged down in these wave counts, guys. There's always multiple alternatives. People get confused, but this shows you a couple different options. Again, we're kind of favoring eventually some sort of wave B, lower high, wave X. We'll see how this unfolds. The bullish view, which we have marked an alt, would be when wave 1 up, wave 2 pullback, and we're now in the midst of wave 3. But again, to me, that's our alternative count. We more favor the wave B or wave X, lower high. Chart 24, 30-minute chart. So today we rallied up, initially stalling right around this downtrend line here. Chart 25, here's a 15-minute chart. So a couple things. I discussed this last week. So you had a clear 5 waves to the downside on April 19th. Broke out of the channel. We started an uptrend. You can count 5 clear waves to the upside. Whenever you can count 5 clear waves, then you look for a higher low, which we got. You see, we got a perfect 3-wave ABC pullback into a demand zone. Right? See how that works? If we hadn't been able to count 5 waves here, we would not have been looking for a higher low here. But because of that, we were looking for this ABC. We got that. There was also this thin zone back here. Remember this big solid red candle? That's a thin zone. And we easily filled that today. Next. Chart 26, moving on to the Qs. Triple Qs up 0.4% today. Again, your bigger resistance is up here, the 50-day moving average and broken oil trend line. Notice your moving average ribbon is also pinching on the other side. Remember, we broke symmetry here. So to me, odds still favor a lower high of some sort. Chart 27, here's that weekly view of the Qs that I've had labeled since last fall, this nested 1, 2, 1, 2. And you can see it's still following how I had it drawn. So potentially we have a wave 3 of 5 here. We've had an initial decline. We're getting our initial bounce. If we get a lower high, I expect another move down on a 4. Then I expect this to be a heck of a buying opportunity. Then we rally to a new high. Next. Chart 28, here's the daily KISS system for the Qs. Again, just like in the S&P, it is flat. Had an excellent trade. So right now you can see the moving average ribbon is pinching on the underside. We have the ATR up here, which is big resistance. So let's see if we form a lower high in here or not. Now, what would cause the KISS system to go back long up here? You would need a pretty good move over the ATR, to me, which isn't ideal because you don't have a great entry. If we do get a lower high wave B, we get another move down in a C, then the KISS system is likely to catch an excellent entry down here. Chart 29, here's the 4 time frames. Again, same thing essentially. You can see the daily up here on the left, bouncing up. We have the ATR above, moving average ribbons, kind of pinching here. We have ATR and support on the lower time frames. Chart 30, here's 2-hour view of the triple Qs. Again, so far, again, we've rallied off that low. We essentially have just only 3 waves up, like I said. There's not 5 waves up here. That's why this could still be just a corrective up move. That's what we favor at the moment. You got a bigger resistance area, supply zone up in here from around 436 to 442. Chart 31, here's another 2-hour view just showing that big range. Chart 32, another 60-minute chart, kind of like on the S&P, showing this one-to-one symmetry at the moment. Here are the fibs. You can see we're a little bit over the 50% fib. 61.8 fib is 435.50 approximately. And chart 33, here's the 15-minute chart of the Qs. Again, same wave count as the S&P. You had 5 waves up here on that first move from April 22nd to April 24th. We got a perfect 3-wave pullback into that demand zone, and we've rallied up. One thing I want to mention, chart 34, here's the mean reversion systems that we closed out last week for excellent trades. All these were nice winning trades. I mentioned these guys, they're all flat, but should we get that wave C, should we get that wave B lower high, and then that next wave C move down, then we're likely to see mean reversion systems start buying that pullback. And I think they'll be profitable. The nice thing is some of the very easily triggered mean reversion systems that can be a little early will probably not trigger on the next sell-off. It'll be more of the harder to trigger ones, higher probability ones. So just giving you a heads up there. Chart 35, here's IWM small caps. Again, so far, last couple weeks, nice rally out of the demand zone, just above the 200-day moving average. Okay, so far we just have 3 waves up. Clearly that picture perfect textbook rising wedge played out beautifully. That does it for the major indexes, guys. Let's go and move on. We're not going to discuss a bunch of indicators here. Here's the VIX. So VIX continues to move down as the markets moved up. Chart 37, here's a 60-minute chart of the VIX, kind of wedging down. We'll just continue to monitor this little MACD divergence at the moment. Chart 38, here's the SVXY with the S&P 500. That's the inverse VIX ETF. But you can see how the two just move just lockstep with one another. But one thing I've noticed is the SVXY tends to lead. It tends to have its moves first, tends to top first, tends to bottom first, as you can see. So it's something to kind of a nice little indicator to keep an eye on. Moving on, let's look at a few sectors. Just going to look at a few. Remember, Steve discussed all the sectors last night. So here's XLK Technology. Again, it had sold off, filled that gap, and bounced off the 38.2% fib. Nice move up so far. Big resistance is up here, still a little ways up. Don't think it's going to run it. That's going to be a sticking point for it, perhaps. Chart 40, here's the semiconductors. Also nice bounce. It's now back to the 50-day moving average and into a supply zone up here. Chart 41, here's biotech. Now, biotech, last week I pointed out a low-risk setup down here around the 200-day moving average. It's had a heck of a sell-off. You had finally, on that last low, double bottom, you had some RSI divergence. So really nice entry there. I hope some of you took that long. Chart 42, LABU, that's the triple long ETF for biotech. Again, that was one way to play it. It was up 7.5% today. Great day. Chart 43, utilities, they've been strong here lately. Chart 44, real estate, been weak. It's bounced back now to the other side of the 200-day moving average. Energy area, chart 45, XLE Energy continues bouncing. Again, so far we just have a lower high at the moment. And chart 46, oil services. Again, it's holding this 50, 200-day moving average. To me, I think it's could be a low risk area to be long. Added a little pattern here. We'll see if this can pop up or not. And finally, chart 47, XOP, S&P 500, gas and oil exploration, also moving up. Again, similar look to the XLE. Next. Moving on to the commodities, here's DBC, that's the index, down, it's down about 0.1% today. It's still within the confines of this big coil on the weekly. Chart 49, here's crude oil, pulling back, stalling around the 20-day moving average there. Remember, a couple weeks ago, it stalled at that supply zone. The bigger pattern here right now is this uptrend channel, which is still holding, which also corresponds with the 50-day moving average. Chart 50, UNG, natural gas ETF. Nice bounce today. I've been monitoring this. I like this wedge. You got a nice MACD divergence. UNG is really tough to trade, guys. And they have these annoying K1s unless you have a tax-free IRA account where it doesn't matter. That's where I trade it, so I don't have to deal with that. But this is a really nice looking pattern. I bought a little bit more of this today. Chart 51, copper just continues powering up. Another 2.25% today. One hell of a move from that coil break. Definitely inflationary. Chart 52, here's copper on the daily. Look at this move. That is one heck of a move. Moving average ribbon's getting wide, but this trend is extremely strong. Absolutely no MACD divergence. Chart 53, DBA. Now, finally, one of these commodities is leaking oil. Again, this has had a hell of a move, DBA. We put it out as a long back here in January out of this coil. It was a hell of a swing trade. We set up another tight flag there in March. But again, we had divergence really developing here on the RSI, MACD, nosebleed territory. Big move down today. Likely with that close below the 20-day moving average, it's going to at least test its 50-day. Now, the 50-day down here, guys, that could be a low-risk area to take another long shot. Chart 54, there's the weekly. Remember, had that beautiful cup and handle. Again, not surprised to see it pulling back. Here's a sector I'm monitoring. I bought a little bit of it today. Uranium. This is uranium ETF. It's setting up into a nice coil. Good volume patterns here. Here's the weekly. Nice coil. You can see the falling wedge back here. And finally, chart 57, here's the monthly. So again, I was bullish on uranium back in 2020 on this multi-year trendline break. Then set up into a coil in 2022, 23, broke out of that. Where could this go over time? I think it can go up here in the 40s. This is the next supply zone. I think that's where it could potentially go, guys. All right, moving on. Here's the bond market, 10-year treasury yield, pulling back from the top part of that channel. You also had some RSI divergence there. Chart 59, likewise, inverse TLT, 20-year bonds bouncing off that lower channel line. Could be a low risk long there with a tight stop right at that 87.30 low. Chart 60, Bitcoin, high yield corporate bonds. Remember, they bounced off this demand zone. Nice move. Slightly over the 50-day moving average today. Moving to Bitcoin, here's Bitcoin bouncing here a little bit after hours. The big shelf support is right here around the 60,000 area. If that is lost, there's a big thin zone here. I think Bitcoin falls all the way into this demand zone in the lower 50,000 range. Okay, but again, this could just be a flag setting up and we make a new high. Let's take a look at, well, before we do that, if Bitcoin does break that support, BITI is one way to play it. That's the inverse Bitcoin ETF. Notice you got a nice base forming here. And chart 63, here's Coinbase, one of the crypto stocks, Cathie Woods. This thing looks pretty weak. In fact, it could be a pretty good short if it loses this lower trend line. Next. Chart 64, US dollar down today, but otherwise still in this little flag channel. Chart 65, Japanese yen. As you know, this has been absolutely pummeled, bouncing a little bit today. I heard they're going to need to intervene here. Would not surprise me. Their currency has been absolutely destroyed. Here's FXY. That's a way to trade it. You can see it has the same pattern. Moving on to precious metals. Here's gold, which is down about it was up a 0.5% today. You can see, again, pull back to the 20-day moving average. Like I said, we either have a major top up there in April, or this is a wave 4 and we're going to move in wave 5. We'll see which way it goes. The stocks are leading here at the moment. Chart 68, here's the weekly. Jabber 69, there's GLD 2-hour time frame, shows that wave count. Potentially high there with that wave 505, and we have lower highs in place at the moment. Looking at silver here, silver, remember, had a big breakout in early April, pulled back. And again, longer term traders could have bought this little pullback, but it'll be interesting. If we form a lower high here and come down again, this, if it back tests this broken trend line of the coil, that could be an excellent low risk long opportunity. Here's the weekly. Again, bullish breakout from this ABCDE coil. Weekly chart looks great. Finally pulled back last week. Jabber 72. Here's the tradable ETF SOV. Again, volume patterns are good. Like I said, guys, ultimately, it depends on how long this consolidates, but ultimately, to me, silver is going to go much higher in the long term, maybe up in the 50 range. Looking at the stocks, here's GDX up today. Again, it had basically an ABC pullback, 3-wave, which is typically bullish, into that support area. Remember, this was previous resistance, became support. Now we'll see if we can get another high or not. The stocks are leading. Jabber 74, here's the 2-hour time frame. See this channel, which broke out last week. Haven't taken out the high yet, but getting close. All right, guys. Finally, let's move to some trade ideas. So Jabber 75, CENX, the aluminum stock, nice tight coil forming, one to watch. Jabber 76, Alcoa, little breakout here over today's highs. I think they reported already. Jabber 77, LPG, this is one from last week, still looks pretty good as a long. Jabber 78, NVIDIA, I'm not showing this as a long really, but just showing you it is slightly above this little downtrend line. I know some of you went long. KISS system I don't think is back long yet. It did find support at the 38% fib down here. Jabber 79, BABA, the Chinese market's been doing pretty well here. FXI, that's one of the ETFs, as well as yen. Jabber 80, TMDX, nice move up today. Looks like a little double top here, but it could be a breakout above this area for a quick long. Jabber 81, Hertz. Now, this one's interesting. It's been absolutely pummeled. It's down here in the 4s, but could be lower risk here with a move. A trigger would be 1 penny above today's highs with immediate stop at the lows, just for a bounce trade. You also have a little RSI divergence. Jabber 82, PTCT, nice move up here. You got resistance around the 32, 90, 33 area to watch. Jabber 83, NIVF, looks like a little biotech, very whippy. I mean, be careful of this. You could see it was trading in the double digits just a month ago. It's now down around $2. We have a really tight coil here, good volume. Again, only for aggressive traders. Jabber 84, Wingstop, breaking out of this big ascending triangle pattern. Jabber 85, COF Capital One, kind of a little cup and handle look if it can take out that resistance at 149, 150. Jabber 86, FE, potential little breakout. And finally, Hertz. So here's the actual Hertz chart that I wanted. The one above was an older version. So here would be my trigger. My trigger would be above today's highs, immediate stop at the lows. First target would be the 9 EMA. All right, guys, that does it. Quick check on futures. Futures are essentially flat tonight. ES futures are down 4 points. So we'll see what happens tomorrow. Have a wonderful rest of your evening. Thank you for your support. And again, if you're just a YouTube subscriber, please consider subscribing to us. We have pretty amazing stuff. I think you'll be impressed. Take care.